Now, it looks like Dr. Doom was right again. The last time that we spoke, Marc Faber called for stocks to rally from March to the end of April, and they look to be doing just that. But will the rally last even longer? Let's ask Dr. Doom himself. We have Marc Faber, author of the Gloom, Boom, and Doom Report, and he joins us this morning from Singapore. Good to see you once again, Mark. So what do you think about this rally? Will it last longer than just the end of April? Does it have some legs here?
Well, I wished I knew, but I think it's important to realize that many stocks actually made their lows already last October, and then fewer stocks made lows in November, on November 21st, and then we had in the US a 25% rally, and then we came off again into March 6th of this year, and intraday we bottomed out, and since then the market is up 26% in the US. But in March, although the indices were lower than last November, only very few stocks made new lows, and many markets in Asia didn't make new lows. In fact, if you take markets like Korea, Taiwan, Hong Kong, from their lows, they're up now 40%. So I don't think that we will go and make new lows for these markets, because that would mean that these markets would have to tumble very significantly. And I think that the economic news, whereas it won't be good, I think the rate of getting worse will slow down. And so the bullish analysts will immediately say, see, the economy has bottomed out, and combined with the stimulus packages, it will lift somewhat sentiment. So I think that after this rally we had since March 6th, we need some kind of a correction, maybe around 5 to 10%. And after that, we can probably rally more into, say, July.
Okay, so we're going to see a bit of a correction, right, Mark? When is that going to take place, and how deep do you think it will be? You said 10%, but what's going to precipitate it?
Well, I mean, we rallied on the S&P from 666 to above 840. We're now around 830. I think we can go down to around 750. But it's important that we don't go below the November lows on the S&P. And after this correction, I think we should be able to rally somewhat more.
Okay, well, Mark, you're also an investor as well as an author. So as an investor, what are you doing in this current rally? Are you selling into it or buying more?
Well, I mean, I bought some resource shares last November, and many resource stocks have actually doubled and trebled in values depending which ones you bought. The Newmont Minings of this world, they have doubled in value since November, and the more speculative exploration companies, some of them have gone up 3 times from their lows. So these stocks I'm no longer particularly interested in. But I've been buying a little bit of banks here and there, more as a trade, because if I look, say, at the Citigroup, it dropped from $57 to $1. I mean, it could easily, now it's around $2.50. I think it could easily rebound to around $5. Whether it will afterwards go to zero or not, that remains another story. But all I'm saying is a lot of these companies, they've been so much decimated, and what they can now do is basically hand over their lousy assets to the government, in other words, to the taxpayer, and so they'll end up, I guess, with some viable business where they can increase fees and again cheat the taxpayer, who will then have to pay higher banking fees and takes over the bad assets of the banks. It's a wonderful world.
Yes, it's a wonderful world, Mark.
Yes.
I'm going to take some viewer emails right now, and this one comes from Marty Law. He wants to ask, will the Treasury bond bull market go bearish before 2010?
The Treasury bond market, the long end, the 10 years and the 30 years have been in a bull market from September 21st, 1981 until December 2008, when the 10 years on December 18th, 2008 touched 2.0% yield and the 30 years 2.51. Since then, yields, despite the intervention by the governments, have actually backed up. Well, basically, we had a long-term bull market in bonds, 1981 to 2008, and I think in 2009, we have now the beginning of a long-term bear market that will extend for the next 15 to 20 years.
Okay, well, let's turn to U.S. stocks, Marcus. I really want to ask you about the S&P 500. You said it's going towards 870. What does that mean for Asian stocks then?
Well, I'm not a prophet, and I can't tell you which day and at what price exactly an index peaks out. I think we had a very good rally from 666 to around 840. I think we can correct now, and afterwards into July we can have a further rally. And for Asian markets, I think the Asian markets in terms of value are much better value than the S&P, because don't forget that the low at the end of the last year, the Kospi, the Korean index and the Japanese index were kind of at 20, 30-year lows. The S&P is nowhere near that low, relatively speaking. So I think that the Asian markets, actually on every setback, should be bought.
Okay, Mark, quickly, I want to ask you about the changes in the mark-to-market accounting standards, but how do you think this changes the game?
Well, I personally, I mark to market my portfolio whenever I make a valuation. I don't say, well, the portfolio is down 50%, but I think it's actually worth 120% more than what the valuation is. I think mark to market is essential for the financial service industry to eventually become clean.
Mark, I want to bring up more viewer emails and questions for you. First off, this comes from Tim Teslak, and he says, Dear Dr. Faber, how do you see the end game playing out for the U.S. zombie banks?
Well, good question. I think that for the time being, and you just showed a spot about 10 minutes ago about Tim Geithner, who wants to identify the bad and rotten apples in the system. Well, he should buy a mirror and stand in front of the mirror himself with Mr. Ben Bernanke and Mr. Larry Summers. There you have the rotten apples.
Okay, Mark. Well, I think George Soros has also added his views on this topic as well. So let me just ask you another viewer email, another viewer question for you. What are the strongest Asian nations in which an American can easily invest in right now?
Well, I think if you're an American investor, depending whether you have an account that allows you to buy individual securities, but if you cannot buy individual securities, then I would buy ETFs on Hong Kong and Singapore and Taiwan and South Korea and also Japan. I think all the Asian markets look actually quite okay. But we had a strong rally already, as I said, in some cases 40% up from the lows. And I think some profit-taking is overdue. But I would say to every buyer of Asian securities, I think that if you buy Asian securities over the next 3 months, for sure, in the next 5 to 10 years, you will make money.
Dr. Faber, I just want to jump in here, if I can, and ask you about the earlier question about U.S. banks. You're actually saying, in terms of buying opportunity, look at the most leveraged garbage companies,
yes.
quote unquote, the most
yes.
leveraged garbage companies, and you're actually saying that financials, U.S. financials, offer actually the greatest rebound potential. Could you sort of explain and take us through what you mean here?
When you have a bear market, the garbage goes down the most. And when the bear market bottoms out, and I assume that on March 6, 2009, the market bottomed out, for the time being, whether in a year's time will be low or not, that I don't know. In the rebound, the garbage bounces back the strongest because it's